So let's talk Q4. If you look back at the data, the final quarter of the year, October through December, has historically been its strongest stretch. Across its history, Bitcoin has finished Q4 in positive territory roughly 70% of the time, with average gains around 44%. In some years, it's been even more dramatic. In October 2017, Bitcoin climbed 48%. In November of that same year, it surged 53%, and in October 2020, it delivered a 27% return. So why does Q4 often deliver? A few reasons repeat year after year. More fresh capital flows in before year end, institutional investors tend to tidy up their portfolios and sometimes push into new assets, and optimism about the year ahead often builds momentum. The only consistent exception is September, which has historically been Bitcoin's weakest month, rarely showing gains above 8%. In other words, September can feel like the market catching its breath before things take off. That brings us to 2025, and why this particular Q4 could be especially interesting. Right now, the US Federal Reserve is expected to cut interest rates in September, with markets pricing in a 99% probability of at least one cut. Some market commentators even anticipate 2 cuts before the end of the year. So why does that matter for Bitcoin? Lower interest rates usually make borrowing cheaper and increase liquidity in the system. Investors tend to move money out of ultra-safe, low-yield places like money market funds, currently holding more than $7 trillion, and into riskier assets with higher upside like stocks, gold, and yes, Bitcoin. In the past, even modest rate cuts have helped lift Bitcoin, like in September 2024, when a 0.25% Fed cut was associated with a 4% Bitcoin jump. That rally reflected a broader shift into risk-on positioning driven by lower rates. And we're already seeing the early signs. In early September, Bitcoin was trading near $112,000, recovering momentum as expectations of Fed easing grew. It's not just macro policy either. 2025 has also seen major global policy shifts, like US executive orders formally allowing crypto in 401k retirement plans and new regulatory frameworks for stablecoins, which signal greater institutional and government acceptance. These steps may not move markets in a single day, but together they build long-term confidence and adoption. So, if we put this all together, what could power this coming Q4? With historically strong seasonal performance, a potential Fed rate cut, or multiple rate cuts unlocking fresh liquidity and growing global regulatory clarity, it's not hard to see why many are eyeing Q4 2025 as potentially one of Bitcoin's most bullish runs yet. Of course, past performance is never a guarantee, and Bitcoin remains as volatile as ever. Like we always say, the most important thing is that you do your own research before making any investment decisions. But if history is any guide and macro winds align, this could be the quarter that defines the year.